I just wanted to get an updated view on your sense of your view on financial stability risks and whether or not you see any pockets of excess out in financial markets that concern you, either specifically to that area of the market or as in terms of like the threat that it could propose to the overall economy.
Sure. So, as you know, financial stability for us is a framework. It's not one thing. It's not a particular market or a particular asset or anything like that. It's a framework that we have. We report on it semi-annually. The board gets a report on it quarterly, and we monitor every day. And it has 4 pillars, and those are 4 key vulnerabilities: asset valuations, debt owed by businesses and households, funding risk, and leverage among financial institutions. Those 4 things, and I'll just quickly touch on them. So if you look at asset valuations, you can say that by some measures, some asset valuations are elevated compared to history. I think that's clear. In terms of households and businesses, households entered the crisis in very good shape by historical standards. Leverage in the household sector had been just kind of gradually moving down and down and down since the financial crisis. Now, there was some negative effects on that. People lost their jobs and that sort of thing, but they've also gotten a lot of support now. So the damage hasn't been as bad as we thought. Businesses, by the same token, had a high debt load coming in, and many saw their revenues decline. But they've done so much financing, and there's a lot of cash on their balance sheets. So nothing in those 2 sectors really jumps out as really troubling. Short-term, I mentioned funding risk as the last one. So we saw again in this crisis breakdowns in parts of the short-term funding markets. Came under a tremendous amount of stress, and they've been quiet since the spring. And we shut down our facilities and all that. But we don't feel like we can let the moment pass without just saying again that some aspects of the short-term funding markets and more broadly non-bank financial intermediation didn't hold up so well under great stress, under tremendous stress, and we need to go back and look at that. So a very high priority for us as regulators and supervisors is going to be to go back, and this will involve all the other regulatory agencies. It does involve all of them as well, and see if we can strengthen those things. So that's a sort of a broader, detailed look.
Shepard Smith here. Thanks for watching CNBC on YouTube.